all go. And so we're not going to talk about political parties. We're going to talk about tax stuff specifically. So Colorado is unique, as some of you, who are avid regular listeners. We did a little, video a couple sessions ago that talked about kind of the uniqueness in Colorado where tax increases have to go to a vote of the people. And so with this midterm, we had a vote of the people, and we increased a fare and kind of eliminated some deductions to fund some things within the state. So I wanted to kind of go through some of those. So first, from the state of Colorado, we had Proposition FF, which is to support healthy meals for kids in public schools. And so what this one does is it puts a cap on deductions for those that, this is an individual tax item. So you don't often hear SALTovation talking about individual tax concepts, but this is one of those where if you make, for federal tax purposes, more than $300,000, your deductions are capped for Colorado purposes at $12,000 for single filers or $16,000 for married filing jointly. So this is an item that, the standard deduction for Fed purposes for married filing jointly, I think is what, 24, 25 grand, 26, something like that. This would be a modification to your federal taxable income where you would add back that excess of standardized deduction. And this is to fund, again, healthy meals for kids in public schools in the state. And then we had, I don't think it's Prop 121, which is an overall rate reduction. So Colorado has a flat rate. For a bajillion years, it was 4.63. We had some temporary rate reductions. I believe it was in 2020, Stace, where we went down from 4.63 to 4.55. And then this past round, we just approved likely. Now, all of these measures have not been solidified. They're still counting votes, but this one has a very high majority as of kind of time of taping. It was like a 65-35 yes vote to reduce the rate from 4.55% to 4.4%. So that would be effective for 2023 tax years. And what you would also need, so where you would also use this is when you're doing your annual provisions, your income tax provisions, your deferred and your current rate for 2020, or your deferred rate for 2023 is going to be reduced, assuming that this passes, because it is a known tax law change. So just something to think about. 122 has been getting a lot of buzz, and that is the legalization and decriminalization of mushrooms. We have seen, there are no, or from what I read, the actual law is very, very long, but with legalization of substances comes tax increases. But what this state has done is, and again, this is a very, very tight margin, so it might not even pass, but right now it's, I think, 51-49 favorable vote for the decriminalization of mushrooms at the state level, which decriminalizes possession, use, growing, and sharing. So what you don't hear in that is the sale of, but it decriminalizes the use and sharing and kind of individual consumption of. And then also with the mushrooms is this also, I think, expunges those who've been arrested for mushroom related crimes, and it's kind of, goes away, their criminal record related to that mushroom arrest. What also happens is by the end of late 2024, you'll be able to use mushrooms and other psychedelics. There are some very specifics. Cannot pronounce them, so I'm not going to even attempt. Usage of mushrooms in a licensed facility, so kind of a wellness center. A lot of this being, studies have found that there are incredible mental health benefits to various psychedelics and strains and whatnot. I do not claim to be an expert in mushroom usage or mushrooms in general, but another thing that we'll probably expand our business into to just understand how to help people tax these, right? And then what's also interesting is the local governments in Colorado have the ability to regulate how they see fit, but they cannot ban them. So kind of some interesting things that are looks like they will pass in Colorado, but we'll have to, stay in touch with Saltovation, and we can keep you up to date to see what actually passes.